Hey everyone, Ben here and welcome to Motivation to Invest. There's been a lot of talk of short positions recently. So for those who don't know what a short is basically where you bet that the market will fall and you make money from that bet paying off. Now, of course, we can talk about the ethical reasons of opening a short position, but the idea behind them is if you can predict when a certain stock or market will fall, that you can make some serious money. Arguably the most famous short in history is that of The Big Short, of which the movie was made. This outlines the true story of a series of investors and traders who actually predicted the 2008 financial crisis and predicted that mortgage-backed securities would cause the stock market to plummet. Many of these people became billionaires from that trade.
Triple B's, zero. And then that happens. That's America's housing market.
So where could be the next Big Short? Well, unfortunately, my personal crystal ball does not work right now, but I was speaking to a good friend of mine who's pretty high up in a famous investment banking firm, of which I won't mention the name of. And basically, he told me about an investment thesis by a famous hedge fund manager, billionaire hedge fund manager, called Kyle Bass of Heyman Capital Management. Now, Kyle Bass is a really switched on guy, and he actually predicted the 2008 financial crisis, and I believe he actually made an absolute killing on that trade. So really, he should have been in the Big Short movie with the other guys. Either way, the insightful billionaire Kyle Bass now has another major short position. This could be the next Big Short. So in this video, I'm going to dive into exactly what this short is and his investing thesis. But before we dive right in, if you're new around here, feel free to join the investing family by hitting that subscribe button and turning that notification bell on. And if you do find any value in this video at all, feel free to give it a big thumbs up. With that being said, let's dive in. Now, I actually found a recent interview by Kyle Bass and he was talking about this major short position. And it seems basically he's predicting another Asian financial crisis, more specifically in Hong Kong. So he's predicting a major financial crisis in Hong Kong, and he's predicting that the Hong Kong dollar will fall. So basically, if you're trying to make money off this trade, you'd be taking a major short position against the Hong Kong dollar. That's basically my reasoning I can see from his investing thesis. Now, of course, guys, this is not financial advice, and taking a short position is incredibly risky because most things tend to move upwards in the stock market or even in currencies. So if you're taking a short position, you really need to have a long time horizon. In a recent interview I watched of Kyle Bass, he basically stated he doesn't know exactly when this will happen, this crisis will happen, but he knows it will in the future. So it could be 1 month, 1 week, it could be 1 year, 5 years, 10 years down the line. I'm assuming his investment firm has got really probably a complex setup, but in simple terms, he's probably got a rolling short position on the Hong Kong dollar. That's just my personal opinion from the interviews I've watched by him and from the information my friend told me. So I'm going to dive into 5 major catalysts why Kyle Bass, the hedge fund manager, actually believes the Hong Kong dollar could fall. So the first point, this is a direct quote from this hedge fund manager. He basically states that Hong Kong is the most highly levered country in the world with regards to debt to GDP. So in his interview, he basically stated that Hong Kong has 8.5 times debt to GDP. Now I'll play you the clip from the interview.
I'll conclude by saying the Hong Kong banking system is the most levered banking system in the world in relation to its GDP. It's 8.5 times its GDP. To put that into perspective, when the US entered the financial crisis in 2007, our banking system was 1 times GDP on balance sheet and about another 0.75 times off balance sheet. So we were less than 2 times levered. Hong Kong is 8.5 times levered. You remember when the European crisis hit, you had the European dominoes falling like flies in 2011, but you had Iceland, Ireland, Cyprus, Greece, they all fell. Their banking systems were almost 10 times their GDP. So when losses rolled in a recession, the sovereign had to step in to help the banks, and it broke the sovereign.
Now that's really interesting stuff, but I actually personally, I thought I'll check this information out because that really seems like a really high number. And I checked it out, and it seems from the information I found here on tradingeconomics.com that Hong Kong's debt to GDP is high, but not as high as he said. So perhaps he has information that we don't have access to. So it says basically Hong Kong's debt is 88% of GDP, not 8.5 times. So maybe I'm misinterpreting the information wrong, or maybe he has access to information that we don't have access. I don't think he's making the whole thing up, but perhaps he has access to information that we don't have. He actually stated that China actually pays off a lot of these think tanks to provide certain information to the public. So perhaps we're being fed false information from China. Okay, catalyst number 2 is the Hong Kong Central Bank is not a real central bank, so they don't have the same flexibility that the Federal Reserve has in the US. So the Federal Reserve can expand its balance sheet, print a load of money, print trillions of dollars in stimulus packages when the economy is going through a downturn in order to help the economy through tough times. In Hong Kong, this is not possible, according to this hedge fund manager.
Imagine if the United States Fed didn't have the ability to expand our balance sheet when the Wuhan flu hit the world. All right. Just imagine a central bank that can't countercyclically spend, inflate its balance sheet. Where would U.S. stocks be if the U.S. didn't print, call it $4 trillion?
Yeah, on the floor. Yeah, for sure.
They'd be down 40 or 50%, right? Or maybe more. But when you look to a currency board or currency peg that was put into place back in 1983, it's completely inflexible. The HKMA is not a real central bank.
And his third major catalyst is that Hong Kong GDP was actually down a massive minus 10% during the global health crisis of 2020. So to put that into perspective, the US GDP decline was a massive minus 3.5%. So he states that Hong Kong's GDP decline was much greater than this.
They actually have real GDP down 10%. It started dropping in June of last year when the protests began. So Hong Kong is facing literally the perfect storm. It has the worst financial setup I've ever seen for a developed nation. And it has the worst possible political situation it can possibly have. And they're only worsening as we speak. And so, you were to start writing, notating each flag that I've just gone through, all of the writing is on the wall, all of it. It's just a question of when it breaks. It will break.
And the fourth major catalyst is basically the Chinese government and control. So for those that don't know, Hong Kong was a former British colony. And when this was finally sort of handed over control to China, of course, there were some terms and stipulations with this. But basically, the day after this handover occurred, the money left China. And basically, a lot of people actually saw that the Chinese government would have a lot more influence in Hong Kong and decided to actually pull their money out of many Hong Kong banks. So Kyle Bass is predicting this could happen again.
Removing basic civil liberties of the population of Hong Kong, right? They removed the autonomy. They changed it from a rule of law to a rule by law. The PLA police came in and now run the Hong Kong police force, and they've brought the heavy hand of China in. Well, for those of you that think this is going to bring some stabilizing force to the region, I completely disagree with.
So that's this big short thesis by this major hedge fund manager. Now, he has been right before, he has been right in the past during the 2008 financial crisis, and he does seem very passionate about the subject. So there is a chance that this could happen in the future. However, as a real big disclaimer, no one, no matter how smart, can truly predict the future and can truly predict how things will play out. But he does make a very good investing thesis of why this could happen in the future. So I'd love to hear your thoughts on this whole situation. What do you think of the Chinese political situation, the situation in Hong Kong, and do you think the second Asian financial crisis will actually occur? I'd love to hear your thoughts, so please do comment below. And like I said previously, guys, this is definitely not financial advice. This is a major short position. This is a real contrarian bet against something which could happen in 1 year, 2 years, 5 years, 10 years, 20 years, or actually never happen at all. So really, to have so much conviction in something like this, you really have to know your stuff. You really have to know the industry, know the macroeconomics, and really see it so blatantly that you feel this is inevitable. So with that being said, if you guys found some value in this video, feel free to give it a big thumbs up. That helps out tremendously with the channel. If you're new around here and you still haven't subscribed, feel free to join the investing family by hitting that subscribe button and turning that notification bell on. And if you do want to know in real time exactly which stocks I'm personally buying, selling, and access my entire portfolio, and join a thriving community of some of the finest people on the internet, then feel free to check out that first link in the description below. With that being said, thank you guys so much for watching. I hope you have an incredible day, and I'll see you in my next video. Invest safe.